Trump gave Iran 48 hours, not a warning, an ultimatum. Either reopen the Strait of Hormuz or face what he called obliteration of critical energy infrastructure. Iran responded by threatening to shut the strait completely and strike energy and water infrastructure across the entire Middle East. That exchange happened this weekend, and most people watching gold right now have no idea how much it changes the picture. Let me walk you through exactly what it means. Gold is sitting at $4,229 as I record this. The low today was $4,100. Last week, gold posted its biggest weekly drop since 1983, 11% in 7 days. And the question everyone is asking is the same one they asked when gold fell after the war started. Is this the end of the bull run, or is this the setup? I'm going to answer that. But first, you need to understand what actually drove this drop, because if you misread the cause, you'll misread what comes next. When the war started, oil spiked. Oil spiking means energy inflation. Energy inflation means the Fed cannot cut rates. In fact, the market is now pricing a 50% probability of a rate hike by October. Not a pause, a hike. And gold pays no interest. When real yields rise and the dollar strengthens, gold gets sold. That's the mechanic. That's why gold fell 11% during a war. Not because gold is broken, because the dollar got stronger faster than the fear trade could hold gold up. That's the same dynamic we explained in the last video. It played out exactly as expected. Now here's where Trump's ultimatum changes the equation. There are two ways this resolves. The first is that Iran blinks. Hormuz reopens, oil pulls back toward $80. The Fed gets breathing room, gold corrects further, maybe to $3,900, maybe $3,800. That would be painful to watch, and it would also be one of the most significant buying opportunities this cycle has produced. The structural case, central banks buying record volumes of physical gold, U.S. debt adding over $1 trillion every 100 days, dollar credibility eroding slowly but permanently, none of that changes because diplomacy worked for 60 days. That scenario, I give about 20% probability right now. The second path is that Iran does not blink, or that Trump strikes regardless, because here's what you need to understand about this ultimatum. It wasn't issued to be ignored. The language was not diplomatic. Obliterate is not a word you use when you're leaving room for negotiation, and Iran's response, threatening to close the strait entirely and hit infrastructure across the region, is not the response of a government preparing to stand down. If this escalates into direct U.S. strikes on Iranian energy infrastructure, we are no longer in a regional war. We are in a global energy crisis. Oil goes above $130, possibly $150. The Fed faces a scenario it has never faced in the modern era: inflation driven by war, not by excess demand, a rate hike into a contracting economy. Stagflation is a word I use lightly, but that is the environment this path leads to. And in that environment, gold does something it hasn't done in this entire move. It decouples from the dollar. It stops caring about real yields. It goes up because confidence itself is breaking down. That's when you see $6,000. That's when JP Morgan's target doesn't look aggressive anymore. That's when UBS's extreme scenario of $7,200 enters the conversation. Now let me give you the key technical levels you need to watch this week. $4,100 is the line. That was today's low. It is not a random number. That level represents a full retracement of the move that began when central bank buying accelerated in late 2024. Institutional buyers have been watching that level. If gold closes above $4,100 for 2 consecutive days on meaningful volume, the correction is likely over. The next targets are $4,400, then $4,600, then a retest of $5,000. If 4,100 breaks with conviction, and by conviction I mean a daily close below that level with above average volume, then we test 3,800 to 3,900. I would not panic at that level. I would treat it exactly the way smart money is treating this entire correction, as compression before expansion. Every major gold bull run in history has included a correction of 15 to 20%. What we've seen is within that range. The direction of the larger trend has not changed. Here's what I want you to take away from this. Trump's ultimatum expires. The market is waiting. The next 48 to 72 hours will tell us which scenario we're in. If you're already positioned in gold, physical or ETF, this is not a moment to panic. This is a moment to watch the $4,100 level with discipline. If you've been waiting for an entry, this zone between 4,100 and 4,300 is the zone that institutional buyers have been circling for weeks. The story hasn't changed. It's just entered its most volatile chapter yet. Watch 4,100, watch the straight, watch what happens when the ultimatum expires. I'll be back with a full update the moment the picture clears. If this gave you clarity, share it with someone who's watching their portfolio bleed and doesn't understand why. Drop a comment below. Which path do you think this takes? I read every single one. XAU Decoded.